The Beginner's Guide to Investing Your First $1,000, Simplified. $1,000 is in fact a big sum of money for some people, and that's why they are scared to invest it too. But in this video, I'll be helping you step by step if you're a beginner, and also I simplified it for you too. Excited? Before we start, don't forget to subscribe. This is Finance Boss, an awesome channel for awesome people like you. Let's start. Number 1. Invest your $1,000 in an index fund. An index is a tool that quickly tells you how the stock market is doing. There are lots of indexes out there like the Dow, Nasdaq, and a bunch of others, but let's use the S&P 500 as an example because it's the most widely used stock market index. The S&P 500 is a sample set of the 500 largest companies all rolled up into one easy-to-read average price. So, if you want to know how the US stock market performs in 2018, rather than looking up all the 500 stocks individually, you can just look up where the S&P 500 started, and that would tell you how the stock market did in 2018. There's two really good reasons to invest in an index fund. The first reason is that you get safety in numbers. With an index fund, you don't have to know how to pick stocks because the S&P 500 consists of 500 widely diversified stocks across different industry sectors, and you don't have to be a genius to benefit from the wealth-creating capabilities of the stock market. All you have to do to get on that long-term upward trend is to invest in an index fund. The second reason is that index funds offer automatic reinvestment. This is really convenient. Once you make your initial $1,000 investment, you'll probably want to keep adding to your nest egg. So what you can do is set up automatic monthly contributions from your bank account, and the index fund will reinvest this additional cash back into the fund every single month at no additional cost. So you can literally just set it and forget it because everything is done for you. Number 2. Invest in an ETF. ETF stands for Exchange Traded Funds, and they're very similar to index funds. Just like index funds, ETFs track an index, and the only difference is in how they're traded. You get access to hundreds and thousands of different stocks, all with one easy purchase. But with the index fund, you can only buy and sell your shares once a day. Number 3. Invest using a robo advisor app. Now, there's a lot of these new apps out there, and they make it super convenient for you to invest. Some of them are Stash Betterment Acorns, Elevest Wealthfront, and the best part is, none of them really have any investment minimums. So, with $1,000, you're definitely good to go. These apps make it super easy. You hook up your bank, transfer over some money, and boom! Your money gets invested in one of their cookie-cutter portfolios that are professionally designed. These prepackaged portfolios combine a handful of ETFs that will give you well-rounded exposure to a variety of stocks and bonds. Acorns give you very little control over your portfolio, so you only get to choose between their prepackaged portfolios, and you can't just buy whatever individual stock you want, so it's the same with all the apps. Number 4. Invest in stocks using the magic formula. If you're more of the DIY type, you might prefer investing in individual stocks, and you probably know this, but the stock market right now is at all-time highs and it's been making record. Highs has been on the longest bull run in history, so that makes people nervous because nobody wants to be that person who buys in at the very top and then everything crashes. So, at this point in the cycle, you want to be really careful, and it's hard to find good bargains out there. Number 5. Invest in the money market. Maybe you're not ready to invest in the stock market yet. Maybe you just want to park your cash somewhere until you decide what you want to do with it. Then consider putting it into what is called money market. Is a place to park your cash short-term and earn a decent yield of about 2 to 3%. When you invest in the money market, you're lending your cash to short-term borrowers, meaning loans with maturities around 3 to 6 months. And it's a very safe place to keep cash because there's hardly any interest rate risk and generally very little credit risk. So I don't know about you, but earning 2 to 3% on my money is way better than my savings account. Number 6. Invest in building up your emergency fund. I know this is really boring personal finance advice, but it's actually really important for investing. Having an emergency fund gives you a cushion so that you're never forced to sell your investments just to pay for an unforeseen expense. You'll just lose and lock in those losses, so since investing success is all about the long term and staying in it for the long term, never want to tie up cash that you need for short-term stuff in the stock market because the stock market is a long-term place. It's not a short-term place, so a good rule of thumb is to have about 3 months worth of expenses in your emergency fund, but I know that's a lot. Number 7. Try out one of those real estate crowdfunding platforms. Traditionally, real estate requires a good amount of capital, but thanks to crowdfunding technology, now you can invest in real estate with just $1,000 or even less. Fundrise is a platform that crowdsources funds online from small investors, and it uses that money to buy investment property all over the US. Real estate generates steady income from rents, but it also appreciates in value. Before you make an investment, you can see the photos and addresses of the projects that your money will be invested in. You can review the financials, and you can even drive by to look at the properties, and you can check it out in person. Number 8. Invest in an REIT or a real estate investment trust. This is another way to invest in real estate similar to crowdfunding, but it's actually a REIT. It's a stock in a company that owns income-producing real estate. REITs trade on an exchange just like stocks, so they trade on the same exchange as where Apple and Microsoft and all these big companies that you know about trade, but it's ownership in a company that owns real estate, and it's a good way to start dipping your toes into real estate because it's obviously a lot cheaper to buy one share of an REIT than it is to buy an entire property. And because of their focus on income-producing properties, they're pretty good for people who are looking for dividends but also want a little bit of growth as well. Number 9. Invest in paying down debt. Okay, I know this isn't really an investment in the traditional sense, but when you get rid of debt, those monthly payments can go towards building up your investments instead of going towards debt. Last but not least, our number 10 is investing in yourself. Einstein once said, we can't solve problems by using the same kind of thinking we used when we created them. In other words, the person who has $1 million in the bank is not the same person as the one who has $100 in the bank. So to go from A to B, you literally need to become a different person and think differently. I've invested tens of thousands of dollars in personal development programs, meditation, retreats, workshops, online courses, and coaches. You name it, and it's so worth it. If I hadn't done that, I probably never would have gone out of debt or even started taking action on any of my investing goals. It's interesting how important investing is in our lives, and at first, I didn't know that investing in yourself is one of them. But I'm telling you, it's literally the most important one. It's not just for your future, but for your mental health too. That's the end of the video. I hope you learned a lot. Thank you so much for watching, and this is Finance Boss, signing off.